Chris Maddox and I of Landmark Title got to host the Ladies in Land chapter in Phoenix here a couple weeks ago. We had a ton of fun. We were able to take a quick flyby of what title insurance is, how escrow works, and a really nice Q&A. The room is full of people that obviously know a ton about title insurance and deal with it every day. But it was really fun to dig into the weeds and get some case study information, best practices, and just have a conversation that we don't get to have on a day-to-day basis. It was very, very, very fun to host our chapter, and I hope you enjoy.
I'm Stephanie, a mother, a pilot. I don't know. Am I trying to say the same thing or just talk? Welcome to the Wisdom and Wealth podcast, where the stories you don't hear are the ones that matter most. I'm Stephanie, a mother, pilot, and commercial real estate professional with deep roots in Arizona. I was an entrepreneur at 24 and sold my first business at 27, and I've been navigating commercial real estate ever since. We are going to be sitting down with some of the biggest names in business around the Phoenix metropolitan area, as well as community leaders and nonprofit organizations that are continuing to improve our community. I'm very excited for the things that they chose to share when they thought nobody was listening. What I've learned in hearing their stories aren't just the struggles and how we overcome them, but really building a network around you of people that know you, trust you, want to help you, and you are trying to give just as much to them as they give to you every single day. And never connecting that relationship to a transaction. It's about the relationships, the connections, and understanding the true stories that shape success. And I hope you find inspiration in the conversations we have.
Hi, everybody. I'm just going to get us started. Thank you guys for getting here. I want to introduce you all to Chris Maddox, who's on my team. The wonderful Chris. We're going to kind of tag team this. I'm going to go through, I know most of you are experts in title insurance in this room, but we just wanted to go over it. If this deck exists, so let's say there's somebody on your team when you go back that might need access to it, understanding, hopefully this is helpful. I'm going to fly by this at 100,000 foot level. And then what I thought would be most helpful is if Chris kind of spoke to case studies. Like, this actually happened. This is what happened. This is why it mattered. And if that's the case, and then giving you guys time to ask questions as well. Okay, title insurance, how, when, and why. So basically the three reasons that title insurance exists. So really what we're trying to do when we insure is we're trying to protect the owner and the lender, their position in the product, in their position as we transact these. So we're looking for things like undisclosed items, forged deeds, errors in public records. This is kind of our job to find these things, mitigate those risks, and transfer the risk essentially to the insurer versus the buyer. Two types of policies exist. One is the owner's policy. You're going to be owning this said thing. The other is lender's policy, protecting their interest in the loan. So things that are covered. So when I look at the covered list, I think, okay, these are the things that we should be afraid of, and this is why we're buying this thing in the first place, right? So things that are forged signatures, undisclosed liens, invalid or poor documentation. We've heard the horror stories in the residential world, right? So we're really trying to focus in on what's covered, what is not covered, or a list there. The additional opportunities you have for the endorsement. These are the things that you could add on to your policy for further protection for your project specifically.
Did you ever cover eminent domain? The issue with eminent domain is government has the absolute right to take the property. So you really can't find insurance specifically regarding that because he can't insure over the government's rights to take property. Yeah. But there are, depending on the specific circumstances, if there is taking or that kind of stuff, there may be some opportunity to get insurance, to get coverage, that we can't insure over that, right? Thank you.
Okay, so how it works, this is kind of the back end process. So when you guys send us what you're asking of us to do, our very first step is we're going to order the search. So we're going to perform a public search of what's called a title plant. They're going to review the chain of title. You're searching for those liens, judgments, and tax records. So the next email you get from us is that title commitment. That's that documentation that says, these are the exceptions. These are the requirements in order to eventually give you a policy. So that's kind of your first look under the hood. So then next step in the process is you're closing your escrow. So once all those requirements are satisfied, we can give you that policy and you pay that one-time premium. And then should a claim come up, we're there to protect. So the different things that make a policy go up or go down, we'll get into the discounts in the next slide. But essentially, what is the property value that you're purchasing? What are the endorsements that you chose to add onto that policy? What jurisdiction and state is the property located? Well, how complex is the property? And this one's fun for y'all. This is the attorney fees. Those are really fun to pay to clean up all the stuff. And then the simultaneous insurance. So you're issuing the policies at the same time, essentially. Lots of words. Sorry, we did our best. So how does the rate situation work? Because I know it's kind of this sometimes a blind spot. So Arizona isn't a filed state. What does that mean? That we have to file our rates to the state of Arizona. So those are our rates. And if we were in a non-filed state, everything would be up for negotiation from a cost perspective. Does anybody in this room work nationally? Okay. So what are the discounts that exist on a policy that exists? So you have the simultaneous issue. So when you're getting an owner's and the lender's policy are issued at the same time, there are some discounts. If you have a reissue rate, so a seller recently purchased the property and the prior policy does exist, there's a refinance. So reduced when a lender's policy, reduced lender's policy when refinancing on an existing loan on the same property. So these are in the high volume. These are things you're probably very, very, very familiar with.
So we're filed rate, but there is some wiggle room.
You said it, not me. Okay, so your typical timelines, and I'm not even going to make eye contact with Vicki on the second bullet point because nobody ever wants to put this in writing, but I do a lot of distress work. So these receivers are taking this project on and they have to create a waterfall pro forma. So I have to give them a number to kind of plan on. So this is just kind of the title search and commitment. So we order that obviously at the very start, give us all enough time. More time is always better. You would agree with that. We're going to pay that one-time premium. You can guess the range is quarter to 1.5 on the total purchase price. And then the escrow fees, recording fees, so that just all the closing fees are included in that.
Or junk, as we like to call it.
So what if you don't want it? You're going to be exposed to those claims should they come up, and the lender may require a lender's policy. That's going to be their requirement. Checklist that you all are very, very, very familiar with, but I would hope somebody that's super green might benefit from just kind of going, this is my checklist to go through. These are the things that need to get done in this part of the conversation with the transaction. So what it provides to us. So when you need us to get that title search started, we need the address, the purchase price, the loan amount, if there is one, any existing survey, existing policies, make everything better, faster. Summary of leases and encumbrances and city state. And then we're going to provide you with that commitment, the quote, and endorsements as you request them. So Landmark, it's an interesting industry, right? We all have things that we do a little bit different than somebody else. So one of the things that I love the most about for my clients with Landmark is we have this onboarding experience. So it's not like you have to come and fit into our conveyor belt for a transaction. We're going to ask you, what is your communication style? How do you like to receive information? Do you want documents linked, attached? What are all those nuances that make it easier on you? We fit into your systems versus you sitting into ours. So we onboard you and create a custom file to understand that best. You do have direct access. I previously worked at a company that there was no direct access to your underwriter, to your escrow officer, and that caused a lot of problems. And it was a fun game of telephone. A lot of times when things got solved if we just talked directly. So direct access and real people. We actually answer phones. Yeah. Yay! Yay! Woo! Winning. So as an agent, there's a couple differences. There's corporate offices and different offices they will issue a policy on that paper. One or a couple of some. At Landmark, we do offer policy. We do issue policies on all the major underwriters that I'm sure you guys are familiar working with. This comes in really handy on those multi-site locations. Let's say one of them giving us a problem. We can carve that out and insure it with a different company and still close on time.
And I'm just going to tag in, each underwriter has their own nuances. Some are good with one thing and they're not good with another. So if you've got a client that likes construction, is doing construction, that may be a different one than we have an easement issue or that kind of stuff. Or, we just did a cannabis deal. Well, not everybody does those. So we have access to a whole bunch of different underwriters, which allows us flexibility with that depending on your project. And also sometimes flexibility on pricing. Each underwriter has their own pricing. So we can start. We don't always shop, but if that becomes an issue, we can.
Thank you. We have a pretty significant size escrow team to work with. Every one of us have come from a corporate office and we're choosing this environment or choosing agency. So a lot of names there you probably are familiar with over the years. And that does it for me. So I'm going to give the floor to you, Chris, for our case study.
This is where I do my little song and dance.
Yes.
Bossy, right? So first thing first, who am I? Of course, obviously, my name is Chris. I have been working in title and escrow for 30 years as of this year. It's a long time. Started learning to search title in the early 90s in Georgia. And then I came to Arizona and I've been doing this ever since. And actually, my first job was in that building right over there in 96. So I'm in escrow, but I tend to focus on title. I do a lot of the underwriting. I talk to a lot of the underwriters. And that's where I kind of focus on. So that's where I'm going to talk to you about that kind of stuff. And I'm going to tell you, I didn't practice this and I can ramble. So I will be referring to my notes because I can get off track. But amen. And I do like to be in the weeds. So be careful if you ask questions, you might get more of an answer than you want. Exactly. I'm watching the clock. But I did want to do things differently. I wanted to, title insurance can be pretty dry. It can be pretty not exciting, honestly. But I want to give you guys some real world examples of where you can encounter problems, some problems we've seen, some claims that we've seen. It's always really fun on my side. So hopefully you guys get some information out of that and you can kind of follow along. First things first, we talked about title insurance. She gave you some basics, but I want to talk the things that are covered in a title policy. Off the bat, we cover what we find in the public records, right? Public records means the county records. That's all it means. So we search the public records, we have special plants and they tell us what's there. And we go through all those documents. Sometimes there's 100 documents and we find 10 or 15 or 20 that affect your property. We say, these are the ones that affect this property for this purpose and that kind of stuff. So we are doing our searches and we're finding what's covered. Title policies cover for what we find in the public records. It covers for ownership of the property. Does the seller own the property and can they convey the property to the buyer? So that's kind of a basic. If the seller is a trust, if they're an LLC, can they sell this property? What do we need to get comfortable? What do we need to see? What documentation, that kind of stuff. And then an interesting part, I'll talk about a little bit later, but you guys have all seen, it's on everybody's signature lines, it's out in the industry, fraud, deed fraud, and that kind of stuff. It's a very hot topic. It's a very interesting topic for us in the title industry because it is something that's covered. When you buy a property or someone puts a loan on the property, we're ensuring that the person that signed those documents is legitimate. They can do that. And so it is something we care about. Title policies ensure, as a matter of course, they ensure what we call legal access. You have the right to access your property. Doesn't mean, we'll getting a little ahead of myself. But there's a few other things that are covered under a basic policy, but that's really what we're looking at. Pretty basic, pretty standard. That's what our title insurance is, what our search covers. But what do we care about if you're working with a developer, if you're the developer, if you're looking at the project? There's two flavors of title policies. There's a standard policy and it's your bronze tier. The cheapest one out the gate. It's what most sellers are required to provide. It only covers for the things that I said. It gives you basic coverage. It says, this is what we found in the public record. And if we miss something, then you're covered. But if we told you about that easement's there. We didn't tell you, it's not. The person signed the deed can sign the deed. There's also another policy, you've probably heard of it, called an extended policy. Lenders get it. Sometimes your owners are going to get it. The extended policy covers for off-record matters. So that's things we can't see in the public records. Does anybody have an idea or a theory about one of the things that we can't see in public records? We did have one where a deal got held up because there was Indian burial ground stuff found. But that was way underground. And there ended up not being remains, but it was like archaeological, I should say. So prescriptive rights. Do we know what she means with prescriptive rights? That's okay. A prescriptive right is someone who you didn't give rights to your property, who believes they have the right to use it. So a prescriptive right would be two neighbors, right? Two people on either side of the property. And I'm going to pick on you, Stephanie. Stephanie lives behind me, and I have a property that fronts the road. And Stephanie and I are friends. We're good. And I let Stephanie drive on my property to get to the road. Now, I didn't get an easement. We're friends. We don't care. Does Stephanie have a legal right to use that? I go and sell the property to Vicky. Does Stephanie have the right to traverse Vicky's property?
Yes.
Exactly. Good question. So that gets a little questionable. But it is a matter that we in title do need to be concerned with. This is an off-record matter. Thank you for pointing that out. That we would be concerned with. So how do we what are some other off-record matters? I think we might have a survey company in here, I thought, engineering or survey. Yeah. So those are title matters. So we don't know, we're not an engineering or survey company. So we don't know what's on the property per se. We don't know what's one of the things that a survey would show related to a property. Just an example. What's that?
Well,
A well? What about the easements on the property? Exactly. And the dimensions? And then the property corners, exactly. So a surveyor is going to go out there, they're going to put little things all on the property and say, this is where your property line is. Now, we know practically what the legal description is from a title perspective, but they're going to tell us where that is. They're going to go to the satellites and take the pictures and give us a little drawing of where all that stuff is. Where the easements are they underneath of a building? What do we call an easement that's under a building? An encroachment. It's encroaching. The building is encroaching onto that easement. It can be an issue. So those are off-record matters. We talked about the unrecorded easements. We talked about survey matters. Another matter is parties in possession. Do we have tenants? Are there legal rights? Is there a lease or not a lease? So as a developer, as a buyer, as a lender, you've got to worry about that. There have been recent cases and issues where someone claimed to have a lease or a right to use the property. There was a famous one in Tempe where the people had lived on that property, I think it was city property, where they'd lived on it for 50 years. And the family had lived there forever, no lease. The city wanted to develop it. High-rise apartments now, I think. And again, that wasn't my case. That's not my issue, but that is something that title insurance would have to investigate. The buyer or the lender should investigate, and you may want coverage for. So those are the off-record matters. And where are those disclosed? Where do we deal with all of that stuff? That's in the title commitment. That commitment says, we'll give you a policy in this amount to this person, subject to these requirements, condition on satisfying these requirements, subject to these exceptions. Those are the things we found in the public records that affect your properties, right? That's all pretty easy. But what kind of issues would we see, and what issues have we seen that we can resolve? Now I want to talk about some of those exact issues. There actually are two other off-record matters that I actually didn't mention. One is recent or planned construction. So do we have any contractors in here? Yeah. You probably know more about this than I do. They always do. But the way that Arizona works for commercial properties is if someone delivers material or does work, they have a de facto lien on that property until they're paid. That's it. There's no documentation. There's no nothing. Now, there is some paperwork they're supposed to do, but the courts don't care. The courts really say, they were owed money. You need to pay them. So that is a title matter that we're always concerned with. So, and as a buyer, as a lender, you're always going to be worried about, were there lien rights and that kind of stuff. And then CC&Rs, I'll talk about CC&Rs. We all know CC&Rs are covenants, condition, restrictions. They're like your HOA documents. They say what you can and can't do. So I want to talk about how title insurance actually impacted one of our customers, a few of our customers. We'll talk about a first issue. And we had a client, and he was buying a cluster of 4 and 5 plexes. They'd been there since the 50s. They were really run down. They weren't that nice. He's an investor from California. He's going to come in, going to rehab them. He's going to make them nice. He's going to make a ton of money, right? So he goes in and he buys the project. And I ask him, I say, hey, did you get a survey? He says, how much is that? There's a couple grand. He's like, I don't want to do that. Okay, cool. Say, do you want an extended policy? We talked about the bronze and the platinum or diamond or whatever. And he said, nah, how much is it? No, I don't want that. Okay, sorry, great, cool. We'll close. We close. He goes to develop. There's an SIP easement on that property and some other utility easements. And he goes and he gets a letter from Southwest Gas. And Southwest Gas says, we have an easement on your property. And you can't do what you're doing. You can't move these buildings. You can't put that garage there. There's an easement running there. And he calls me. He says, Chris, help. And we do a lot of investigation. We do some digging. We don't find this easement. SRP. Southwest Gas sends them a copy of the easement. It's a property half a mile away. Because they have great records. But they do have an easement on this property. They have lines on this property. They just didn't record something. They thought it was the SRP easement. There's all sorts of confusion. So he files a claim with title insurance. And our underwriter looks at it and they go, you didn't get a survey. You got a standard policy. The easement's not recorded. You don't have coverage. Now, what does all that mean? I'm getting ahead of myself, but claims, what does a claim look like for title? Probably should have started with this. But title insurance works differently than your home insurance. It's not like if something gets stolen out of your home, they give you the money for it, right? How much did it cost? Here's the receipt. Here's a check. I'm not an underwriter. I don't do it, but I can tell you, they don't want to write a check. Not how it usually works. What they want to do, it's called defensive claim. So when you're buying title insurance, you're buying someone on your side to defend your title to the property. So if someone like Southwest Gas comes in and says, we have an easement, you can ask the title insurer to step in and help. Or you have a neighbor, or you have that situation we talked about. You've got someone who claims to have a right to traverse your property, and we didn't tell you about it. We didn't show it. You bought the right policy. You got the right insurance, got the survey, and we didn't tell you about it and address it before we closed. Now we're going to fight Stephanie and tell her she can't use that property. And maybe we'll write a check. Maybe they'll write a check. Maybe they won't. So that was a fun little one. Any questions for that?
Final outcome of that.
The final outcome was that the claim was denied.
Okay.
Because he didn't have insurance for off-record matters. It wasn't recorded. They had an unrecorded interest, and he didn't get a survey, and we didn't do all of the other steps that would have helped us get comfortable that there was no unrecorded easements.
So he couldn't develop because he could sound close down.
He had to change his development plan, and it cost him and his investors a lot of money. And I want to go back to claims. I'm going to, again, sidetracking. But we talk about a claim, but we don't want them, not just for us. Title insurance does not cover opportunity costs. So all the extra time and effort that you're going to put into this project for issues you didn't know about, the lost upside because you missed the market, you're only covered on this amount for specific issues. So it would only be for how much did it cost for Southwest Gas to relocate that easement. It's not all the money you lost because you had to spend 2 years working on it, right? So keep that in mind on title insurance. So we want to address these things before we close. Yeah.
So they should have gotten a survey.
It should have gotten a survey. Yeah.
Would have shown, or
And then
how would you know without the down part of it? So
now this gets a little in the weeds, which I do like, but we've got a survey, we've got an extended policy, we've got coverage for off record matters. There's a survey question. Surveyors should, in a perfect world, they would what we call staking and flagging for utilities. That's almost never done. Let's just be honest. Should be, but it costs a lot of extra time, money. It's not always done. Sometimes you're covered for it. Sometimes we take exception to it. In this situation, he would have probably been covered because yeah, please. Yay. Yeah.
been working on some project. I would encourage my clients to be diligent because they don't. So
Yep.
I building out my kid,
Okay.
not by me. So we'll just find the apples, or find this work. And you build utilities are in property. Great for the client. I don't.
Yep.
Comment. I have a question. And I'm on public works project today, and private road is already at my road. I think it's interesting the city side, if the utility companies look at stuff. You're legal here, but on the private side, we're talking about what is like life in a state like that, the private developer.
Can't say that. Well, when you're buying and developing a property, you're subject to those existing rights. In the real estate world, at least the way I look at it, I'm not a lawyer, so careful. But the way I look at it is who's on first? Who's on first? So if there's someone on first, someone on third, person that's on third is going to get to home base first. My sports analogy for the day. If those rights were there before you started developing, or claimed to be there before you're developing, you're kind of, I don't want to use the term, but you're stuck. And that really does matter. If you've owned it forever, then you would know that someone's hopefully used your property and that kind of stuff. The city, when dealing with private, I've done a lot of government deals over the years. They tend to, they're the big boats. They expect all the little boats to get out of the way, right? Well, I'm gonna sidetrack again. There is an interesting thing on SRP that's title related because it's common, and it actually deals with another thing that we talked about on access. In Arizona, we have canals everywhere, right? Most of them are SRP. SRP is a pseudo governmental entity, acts like a government, kind of private. There's all those little drainage ditches between the road and your built land. So if I want to go develop a new house subdivision, my access to that property is dependent on going over that canal or ditch. And SRP can revoke that right. They had it before, and their rights are pretty powerful. So they had it early. So how do you get around that? You do exactly what she just said. You're going to go to SRP and say, hey, I need to get over this canal or this ditch. They're going to say, cool, culvert it, put it in a pipe and put it underground and pay me some money. That is absolutely something that it would come up on title insurance. We would either discover it through our inspection. We would ideally see a recorded easement for SRP, and we'd inform you or your clients and we'd look for it. So we're, again, talking about claims specifically. The first step is defensive claim. And then it gets a little goofy, talking about words that barely I understand, which is subrogation and silly stuff. But what they're going to do is the insurance company is going to step in on your behalf. Again, if you get all the way there, you're covered. They say, yes, it's an issue. We didn't catch this easement. Then the title insurer, not me, the actual insurance people, are going to start talking to you in SRP. And they're going to say, how much is this going to cost? How much is your policy? Again, they're not in the habit of writing checks. But in that situation, if it was an issue where someone missed the easement or we covered it for another reason, they would pay in that situation. Under those scenarios, they'd probably pay SRP to relocate that easement.
Is there a scenario for us where they actually pay the insured? Not on the MR issue, but the
Yeah, so the claims have to be, and now we're very much in the weeds. Welcome to my swamp. Worst case scenario is what we call a complete failure of title. You don't own this property. We goofed. The person that sold it to you didn't own it, couldn't convey it. Does it happen? We talked about deed fraud. It does happen. And it's happening oftentimes here. It's a dirty word, but it happens. So what happens if that seller was not real? The fraudulent seller, you've got a full claim on your title policy. Oh my God, I don't own this property. It's the nightmare scenario. That is a situation where you're probably going to get a check. Get a check. And a big one. The cover limit on your policy is the limit on your policy. It's the policy amount, the sales price, the loan amount. I do want to talk a little bit, and now I'm segueing again, but if the lender gets a loan policy, that insures only the lender. So sometimes we'll be doing a deal, you'll be developing property, and if you're the developer and you're getting a loan, it's very helpful to get an owner's policy at the same time. She talked about concurrent rates. You have to pay for the more expensive of the two. It's like buy one, get the other one 50% off. But you really do want it, because if you only got $1 million land policy and you're doing a $30 million loan, the lender would be covered in a loan policy, but the owner's not covered unless you get an updated policy. I want to talk about one issue where we help the developer, and in a concrete example of that. So there's a project, and again, all of the ones I have are real world examples with real clients. So I want to be as vague as I can. So no names. We had a seller who had bought some property, and it was in a nice, desirable deserty area. And it wasn't originally intended for homes. And it's right next to some commercial condominium development. And it's right next to some desert open space. So it's perfect for homes. Great view. There's actually a really beautiful little stone thing, like, a little outcropping and stuff. It's a great location for homes. But the property had some CC&Rs. They restricted where and how homes could be built on the site. And it had some access issues, because there were also some old restrictions saying you couldn't use tons of the property for access to certain roads. So we've got this big, beautiful site in the middle of the desert, basically, or in a deserty location. And I can't build homes on most of it. And I can't use all the roads. So all of this is disclosed on our title policy, because those are recorded documents. So what's the next step? Where do you go? You call me. And we worked with the seller, because he's selling it to a home builder. We worked with them. We reviewed the CC&Rs for that property. We reviewed the CC&Rs for the adjacent properties. We reviewed those restrictions. And we started working between us and the underwriters to see how we can get to the point where you can build homes without these issues and get access to these roadways. So we ended up, we ended up with amending the CC&Rs, and we had to go to the homeowner. Actually, again, it was commercial development. They didn't care, but we ended up trying to go to the commercial development, the condos, and sent out letters, and we gave notices under the agreements, and we worked through those documents to get to the point where Chris and his team can provide coverage that you can build those homes on that site. And it took a long time to get there. I think it is what it is, but yeah.
In that scenario, then amending the CC&R sounds like not they're so old and there's so many parties and most underwriters are wanting to get 100%.
Mm-hmm.
Regardless of what the CC&R saying. So Chris and our team really created this underwriting as sort of a shift array and all the layers on and get comfortable about that. So it took a long time, but they said, okay, notices are sent out. We have everything that they're notices. And the owner was very involved in that.
Yeah.
And we relied on it. And you don't get off position and get some percentage of the line that want to side. No, sure. But I did right on
It gets, again, Swamp, it gets pretty intense, and in the reading, what does section blah, blah, blah say and that kind of stuff. But if you're not working with us, whoever you're working with, again, all of this comes down to you or your client reviewing those things that your title commitments say carefully, talking to your attorney if you've got one, and saying, if you're going to develop land, how does this impact me? And I'm going to talk about something. So you're saying, hey, that was new land. What happens if I buy a house over here on 7th and I want to put a restaurant on that site? There's restaurants all up and down. I don't need to worry about this, right? Because this building's been there forever. This project's been there forever. We talked about apartment, been there forever. But this actually comes up. It's another scenario where CC&Rs, Arizona's famous for them. Someone blinks and they put CC&Rs on a property. And if you're not familiar, and some of you, everybody has probably heard, they used to put CC&Rs for all kinds of crazy stuff that's not illegal or ethical for us anymore. So you're going to look at them and you're going to be like, what? It's crazy what's in them. Like, are the Arcadia ones and stuff. Whoop. Sometimes they have, no businesses, no restaurants, no dental. What's that? I've seen no dental. I've seen, for some reason, because the gas and stuff, there's drugs, no pharmacies, no all this kind of stuff. And maybe they recorded in the 50s and they didn't want that in their neighborhood, But now I want to open a restaurant and I'm buying property that has these restrictions. What do I do? How do I develop this land knowing there's these documents against my property? And how do I protect myself? So this is actually where title insurance can come in again. And there's specific examples. I've got 2 that are here in town. And that's exactly what happened. We had to review the CC&Rs, look at the developments around. Okay, what are your neighbors doing? What have they been doing? How long have they been doing it? And we're evaluating the risk to us. So the buyer, in this case, is transferring his risk to your title insurance company. Now, this is a little beyond what we started out with, which is public records. We're only insuring the stuff we find. Now we're in the risk insurance, and we're going to look at those and go, what's the risk here? What can we get comfortable that if you turn this into a restaurant, we will defend you, and what kind of defense will we give you? And that's where Vicki mentioned earlier, someone talk about endorsements. So we gave people an endorsement saying, you can develop a restaurant on this site. So when you do that, if your neighbors who don't want a restaurant, and that happens, right? Come to you, you come to us, and we fight them for you. And maybe we write a check, who knows? Maybe we lose. But that actually has happened a couple of times here. There's some other things. We talked about the boundary stuff. Boundary line issues are pretty common. I think everybody's heard them. Your fence is on my property. That's a pretty common title insurance thing. Again, in development world, it's the survey that's going to tell us that. Sometimes we'll see it others. One of the ones that's come up on commercial developments, especially in developed areas, is trash enclosures. Is the trash enclosure, I've seen this a dozen times, is the trash enclosure on your property and do you have legal right to use it, or are they coming onto your property to use? So oftentimes it'll be carved out, that little area. So that comes up in title insurance and can be an issue. Now I want to open it up for any questions you have about what I've talked about, or any questions about your projects, your developments, questions, concerns you have about title insurance in particular.
What would I feel like for the zoning? What would I ask the client?
That's a really good question. Title insurance, one of our standard exclusions is zoning. Step one, we don't insure zoning. But that comes with caveats, just like I before ye, except half the time. A lot of our developers want zoning coverage, but not the question you want to answer. So when should you start looking at zoning and that kind of stuff? I can't give advice, but I will give you my professional opinion if it was me. If I was redeveloping a property, I would do it as early in the process as possible. The zoning, look up the zoning, start having that conversation. If it is a developed property, that's a restaurant, and I want to put another restaurant in there, I might just go to the county, look it up and say, yeah, restaurant's fine and that kind of stuff. But am I going to put my money on the line for what I found in the county? If you're developing as early in the process as possible, they need to examine the zoning. When it gets to me, I'm going to get the paralegal a week before closing, and they're going to ask me to insure zoning. They've had 6 months, a year, getting to the point where they're ready to finance, they're ready to close, they're ready to spend money. And then I'm going to say, hey, what'd you get on zoning? And they're going to say, I don't have anything. Now we're stuck. So that is something, if the customer is concerned or issues with zoning, they're going to get their zoning report, get their zoning letter first, start of the process.
I mean, it's a quality meeting. Yeah, zoning compliant plan. It's a little time to get those.
And
I'm a civil engineer, 25 years overtime.
mm,
I making friends with zoning attorneys is like in my back pocket all the time, like right now. And
nice.
You want to at least have like someone in your back pocket, right? Not to necessarily spend the money, not to do it all the time, but you always want to. Especially with the question that you asked before, like I was going to ask what the zoning attorney about it. So I'm curious about
The thing about the zoning, and having that in your pocket, a referral person for a zoning attorney, if that's something that comes up as a question for you, have that person, because there's a few that we know, but she might know one, or somebody else in the room might have some referrals. Often I'm again talking from my perspective, we see variances. Oh, it's been there forever. Setback issues. We did an assisted living facility that was a conversion of a house, and that house didn't meet current setback and zoning issues for today's world. And the customer actually wanted coverage for zoning, And we had to get confirmation that they had a proper approval and the variances for not meeting those setback things. And again, it happened to be because the house was built in 1956 or something silly when they didn't care. But if that customer had developed that property and had hit that wall late in the process, that would have been a huge issue, right? Well, hopefully I didn't bore you too much with the title talk and stuff. And like I said, I tried not to, wanted to give you some real world examples, things that really happen. Yeah, please.
Or what's title work? What about water, like access? Do you guys ever look at that?
We don't insure water rights because, and I might misspeak here, so I want to be careful, but Arizona is unique. I have this conversation with out-of-state attorneys every day, at least once a week, where they're like, I grew up in Maryland, lots of water everywhere. You'd have a pond on your property. That was your water, that's your fish. That's mine. That's not yours. Does it work like that in Arizona? Does not. You have rights to the water, but essentially all water in the land, in the air, on the land, underground, are owned by the public, and then you have a right to use it, that kind of stuff. So we don't insure them because they're kind of, license isn't the right word, but they're temporary rights, and we don't examine and stuff. We actually take exception to them, to water rights. So it's not a title matter, for good or bad. Anything else? Sure.
It's a lot for the like easement project developing where utilities didn't even know that they had defined that. But what about the survey did it utility line for the just like I'll leave it with Brian. No, yeah, not. So during construction, it told us that it cost us $100,000 to get the water. So other trying to house other survey, everything was dialed in from the prior to development. Was that a potential? I don't claim that would be a function. So the title company is that he all the work this out. I mean, obviously we're in a time crunch. But right. But not a yeah. The other project, I mean, utility where ours was another one that it didn't even.
Yeah, this is a pretty interesting and technical issue in that the answer is maybe for whether you could have or would have been covered. In a scenario, we could take exception to, we talked about on the survey, it's, you guys know better, some of you may know better, it's 11A or B or something like that. Table A, survey has their own standards, part of the same standards as me. And one of their standards has to do with underground utilities. We can take exception to that. We don't always. So if you got a survey, you got extended coverage, you may have coverage. And that's a situation where, again, hopefully it wasn't something we did, you might be able to file a claim and deal with the underwriter on that. But it's very specific. We talked about the title commitment in your policy. It's going to have an exception. If you get an extended, does it have an exception for those table A, item 11A or whatever it is, matter or not? Sometimes we take exception if we think there's risk. Sometimes we don't. You're not covered. Yeah. So the policy, in the exceptions are things that we're not covering you for. B. And just to keep things confusing, There's a B1 in the commitment, and there's a B1 in the policy, and they're different. So that's why I always call it exceptions, because it'll say Schedule B exception. So it can get a little confusing there. Cool, good questions. Thank you. Anything else? Awesome. Thanks for your time. Thanks for letting me chat.
Well, thank you guys so much for coming.
Thank you for tuning in today. I hope the conversation was inspiring for you. I hope you got a few laughs out of it and learned a thing or two. Please like, subscribe, and love you. See you next time. Now you're in the streets, y'all. I'm a mom.